Hey there, guys and gals of YouTube world. Hopefully this finds you doing well. Today is Thursday, December the 9th in the year 2021. Hopefully your day's gone great. It's been busy for me so far. It's been making some phone calls and texting because I think I mentioned I'm selling my triplex in Virginia, so I'm lining some stuff up for that. Anyway, I'm going to talk about a couple different things today. I got a tiny little bug flying around here. Interesting. I had the bug guys here spray yesterday, but this is one in the air. Probably came in from outside. Anyway, I had two subscribers post something, I think it was yesterday's video, asking about stocks. And one of them was asking about an emergency fund and perhaps investing that emergency fund into an S&P 500 index fund so they could get the growth that the index fund would provide. Okay? All right, so that's the question. Basically, in a nutshell, should you take your emergency fund and put it into the stock market? All right, here's the answer from my humble opinion. It's also what the Fool says. It's also what other investing sites will say. Remember, I'm not a CPA. I'm not a financial advisor. I'm not an attorney. Okay, my opinion on this matter is, short answer, no. Anything you put in stocks, anytime you invest money in stocks, that money, you should not need it for the next 3 to 5 years, okay? It's not for day traders. It's not for people trying to save money up to buy a house, to buy a car. It's not to store an emergency fund because the stock market can be volatile. S&P 500, yes, the United States stock market, I believe, is the largest stock market in the world. I think. Don't hold me to that. But it's volatile. It's like crypto. It's volatile. We could be going into a period, because I don't personally, I'm not an economist either. Personally, I don't think we're heading towards a recession anytime too soon. But with that being said, and I don't think we're headed for a huge stock market crash. And this is just my opinion. Okay. But we could be heading for a leveling off of stock returns. We have been on a bull market since 2009, I believe. Now we're almost in 2022, so that's 13 years. I believe it's the longest bull run in the history of the United States stock market. Okay? We can't continue this forever. Yes, it can grow even higher. Yes, there are good things happening in the world. But at the same time, the market is, to use the term, is frothy. You know, if you pour a soda, you pour beer, something that foams up, that froth on the top. The market is frothy. Prices they're high. I forget the numbers off the top of my head, but the PE ratio, and if you don't know the PE ratio, you should not be investing in any index fund or any kind of stock market or even a 401k, because you got to know at least the basics. Look up PE, price earnings, P over E, price earnings, okay? Pull up any stock, any fund, anything, you'll see a PE ratio. I have read where the PE, and I'll have these numbers slightly off, but I have read where the S&P 500 historically has a PE ratio of around 18-ish, plus or minus, okay? And that currently it has a PE ratio of around 22, 23, plus or minus, around there, okay? Everything is higher priced than what historically it's because the market gives a multiple for stocks for future earnings, okay? And we are higher now than we have. We were high back, I remember in 1999. I remember reading something about the PE ratios high. Everything was high. And what happened in 2000? It was a big crash. Everything crashed in the stock market, okay? I'm not saying we're going to crash. I'm not saying we're not going to crash. But what I'm saying is we could be in a period of kind of like stagnation. Low growth. It could stagnate. It could level off. It doesn't have to drop. It could level off for a period of years even. Yes, selective stocks will do better. Some will do worse. But it could just flatline, as I say. I've referenced Netflix stock. I bought it in 2005. It flatlined until like 2009 or something like that, until it just shot up. The entire market could flatline for a period of years, even a decade. Okay? It's happened. Look at Japan in the 1990s, 20 years of flatlining, dropping and flatlining, 20 years, okay? Just because we're the United States of America doesn't mean it's not going to happen. Okay. All right. So with that being said, another note on that, your emergency fund. Think about that first word, emergency. It is for an emergency. If your roof blows off, if your car engine blows up, if something happens, that's an emergency, and you need the money. You do not want it in stocks because maybe you have $10,000, but maybe the stock market crashed yesterday and you have $5,000. Okay. Yes, I know it's boring. Yes, I know banks only pay 0.5% of return, but it's your emergency fund. Keep it safe. Okay. Now, with that being said, I'll tell you what I did. Okay. I'm not telling anybody to copy me. Back when I was in my late 20s, I was getting out of the Navy. I became a cop. Right around age 30, I became a cop. Getting out of the Navy, I think I was 29 when I left active duty. Had a job in between, working in business, but for about a year. But I basically had money in stocks. I had a brokerage account. I had a traditional IRA. Somewhere in the 2000s, I started a Roth IRA. Okay. I remember reading the financial stuff about emergency funds, and it would say save up 6 months of your salary. Some would say 3 months, some would say 6. Some would say save up a year. My thought process was, I can't. If I was making, in 1998, I got hired making $23,000 a year. So say by the year 2000, maybe I was making $27,000 with overtime, maybe $30,000. I was like, there's no way I can save up $30,000 and just put it in the bank. I can't do it. But my mind said, well, I got money in stocks. Even if it crashes and gets cut in half, if I have an emergency, and that would be me losing my job, and I got to pay the bills, I could pull the money out of my stock market. I could pull it out, even in an IRA. If it's truly an emergency, you can pull it out. Sure, you might get penalized. But if it's an emergency, you need that money so you can pull it out. Okay? I'm not telling anyone else to do what I did. Okay? I have never had an emergency fund my entire life. Up until I started buying rental property, and it's not called an emergency fund, it's called reserves. Reserves for rental property. What if something goes bad? But with that being said, there's another YouTuber I watch occasionally, Tom McKay. He bought his first rental when he was 19 years old. It was a warehouse, I believe. He's now my age, roughly a little bit older maybe, or right around my age. And he's a multi-millionaire many times over. For real estate, he buys commercial, he buys residential, he flips things, he holds stuff long term. Great YouTube channel. Name's Tom McKay. Oh, flip one flip at a time. He flips a lot. He talks about flipping a lot. Okay, but he talks about buy and hold too. But he has made the comment that his entire life, he never held on to reserves. He would just, as soon as he got money, he would put it into another property. He'd buy land, he'd buy commercial, he'd buy residential. He would keep his money going. And when something happened, he would just use the rent that he's getting in or flipping money that he's getting in to pay for whatever that problem was. So he never kept reserves, at least while he was growing. Now, I would assume he's probably has more money than he knows what to do with in the bank. So I don't know. One other response was about stocks from another subscriber, and I'll try to be quick here. With stock investing, if you want to diversify, say you're a real estate investor, there's different ways to invest in stocks. You have index funds. You have heard me say, I think the index, the S&P 500, there's a potential there it could flatline for a period of years. If you go to the Motley Fool, www.fool.com, if you look at Stock Advisor, and I am a small-time contractor for the Motley Fool, I'm not getting paid to endorse them. I have been a member since 1999. I've been a small-time contractor since 2015, okay? But I think, and I'm biased because I love the Fool, that their one service, they have a bunch of services, but their service called Stock Advisor. I think that is a worthwhile service for anyone to subscribe to. I subscribed to that service in the year 2005, and it changed my life as an investor. I learned so much about investing in stocks. You don't have to study it. You can let the Fool do your heavy lifting and let them choose the stocks that you want to invest in. Let them do the work. Let them do the analysis. Let them run the numbers. All you got to do is read the reports once a month. Both teams, Team David, Team Tom, will pick one stock. It could be something they've chosen before. It could be something brand new. But then the teams each have what they call best buys, 5 best buys, 5 best buys. So that's 12 stocks every single month, 12 different company names. They will write something about, they will tell information about. Yes, I know most people can't buy 12 stocks in a given month, but maybe you can buy one. You can pick what you like out of those, and the next month buy one more or buy two. It's flexible. There's many other ways to invest in stocks. There's dividend paying stocks. If I was going to go after dividend paying stocks, I would look at dividend aristocrats. There's something like 65 companies, and Aristocrat has been a company that has increased its dividend for 25 consecutive years. I personally think I would buy some of those companies because they've shown through 25 years that they've been increasing their dividend, not just maintaining it, but raising it every single year. Dividend Kings have been doing it for 50 years. I like Dividend Aristocrats 25. I figure they got room to grow. Okay. There's also on the Motley Fool discussion boards, and you got one called Saul's discussion board. If you go to Saul's discussion board on the right-hand side, there's some knowledge, there's some links. I would read every single one of those links. That board is extremely strict. They will kick off any poster who violates their rules. The rules are outlined on the right-hand side. There's a bunch of announcements, there's guidelines, there's other things. Read those. But the people on that board, they are extremely focused on picking high growth, aggressive stocks. They are the reason that in 2019, 2020, my stock returns averaged over a 2-year period 100% a year for 2 years because I was somewhat following them and transitioning to following them. And I was buying cloud type internet stocks, cloud stocks. And some of the companies, like I bought Zoom just prior to the pandemic. It took off. I bought other stocks. They are finding these companies before, when they're on the verge, or even when they make it, they find them and they have room to grow. But they are focused. It takes time. If someone wants to follow them, you need to become focused because they may buy today and sell tomorrow because they found something out tomorrow that just changed their mind on it. But for the most part, they buy and hold a year, 2 years, 3 years. They're buy and hold investors, but they don't hold forever. When something changes with the company, if they have a better place to put their money, they will sell it and put it there. There's probably a dozen posters on there who I highly respect, every single one, who every single month they will list their entire portfolio, the stocks they own. They will write up stuff on what they bought, what they sold, why they like certain companies. Each one has their own style of writing. So if you want to get aggressive with your stocks and you want to get, I won't say you'll get 100% a year, but some of those guys get 300% a year, okay? They know what they're doing. It took me a while. I was a buy and hold investor for many, many, many years. I started hearing about that board. I started reading that board. It still took me a while to transition to them. If I had transitioned to them 5 years previously, my goodness, I would have had a lot more money. Yeah, I should have done it then. But I have now branched out into real estate, into oil drilling, and so on and so on. I may make a video in the next day or two on the oil drilling because there's been some fantastic news coming out about that. So anyway, I'm going to wrap this up. Y'all take care. Stay safe. It's a little humid today, and it's warm. My pool is pushing 77 degrees. We've been on a warming trend, so I'm going to be going on a swim here soon. So keep loving life. Mazske is signing out.